Hey there, I'm Cherie. I'm one of the co-founders here at 6040. But before we get into this video today, I'd just like to give you a bit of background about me. I'm an accountant, and before running 6040, I'd actually had my own public accounting practice since 2005, and I'd worked in the industry for years before that. I'm a CPA, a registered tax agent, and a chartered tax advisor with the Tax Institute of Australia. So I pretty much know what I'm talking about when it comes to all things finance, accounting, and taxes for small business. And that's the reason for the video today, to share with you the 3 secrets to improving your cash flow. Now, this is strategy, not tactics. If you're looking for tactics, then please check out our cash flow series where we go through 14 different areas where you can make improvements in your small business. But if you're looking at developing a strategy to make running your finance function awesome, let's get into it.
One of the keys to running a successful business is to both understand and manage cash flow. Effective management of your cash flow means that you're able to plan for future highs and lows in your business, and also to model the cash impact of a decision, such as hiring a new staff member or purchasing a new piece of plant. Now, there's a lot of information around that makes it seem really difficult to prepare a cash flow statement or to build a cash flow projection. The reality is that a lot of the accounting software products already have cash flow reports built in as a standard. You just need to know where to find them. So how do you become a master at managing your cash flow? You do that by understanding the things that drive the cash in your business. And this is where we'll kick off the 3 secrets to improving your cash flow. Big secret number 1 is to understand the cash cycle. Your business can have plenty of profit but still go broke. Now, the secret here is to understand the cash cycle and how it applies to your business. Every business will have its own cycle. There won't ever be 2 businesses that have exactly the same one. The process used to work out the cycle is the same, but the days that it takes cash to run through a business, now that's totally unique. You cannot run a business just looking at a profit and loss alone, unless you run your accounts on a cash basis. The reason for this is that a profit and loss, or an income statement, is based upon accrual accounting. Now that shows sales that you've made but you haven't yet received the cash for, and things that you've bought but may not have yet paid for. A cash flow statement, on the other hand, is simply money in less money out. No fancy accounting tricks or gimmicks, just the hard data. Many small business owners don't realize that profit and cash aren't the same thing, because you might know at times your business is making money, but there just never seems enough cash on hand at the right time to do things like make payroll, cover overhead, pay vendors, let alone to pay or invest in yourself. Any shortfall of cash will destroy your business and create large amounts of personal stress. This is a major reason to have a great cash plan in place. You make better decisions when you're not pressured. It also seems easier to get cash when you don't need it. This means putting in place financing facilities before you need them. Instead of stress, let's build cash flow confidence. So now let's take a look at what drives cash. On this slide, we've got the information about what constitutes money coming in. Have a look at this list here. These are the different types of money that a business will bring in. You'll see that we've listed a classification on the right-hand side. This is going to be used later when we look at a cash flow report, but it is useful to know that there's 3 types of classification of cash flow: operating, financing, and investing. We'll talk more about this in a later program, but for now, just recognize that the different sources of money in, or where the cash comes from. This slide here takes a look at the money going out of the business. So these are payments that will leave the business's bank account and go out to third parties. The cash cycle is the timing between when your business takes something into inventory and you have to pay for it, and at the other end, it's when you ultimately get paid for the goods or services you've sold. One number we think that you should check regularly is the number of days in your cash conversion cycle. If this number gets too big, then you're likely having some issues. By knowing what goes into a cash conversion cycle, it means that you then know how you can approach making improvements. And if you've got any questions about this, please just reach out to us, as we're happy to help. This topic will be a little harder than others to understand, but it is essential to your overall cash strategy, as it will help you decide on things like what terms that you'll offer when you sell something to a client, when you might require upfront payment for goods, or if you make an interim claim for payment. And it can also make sure that you're more aware of inventory buying decisions, so you're not holding stock on the floor for too long. So what we have here is a profit and loss on the left and a cash flow statement on the right. Notice how what's on the cash flow statement doesn't really have much to do with what's on the profit and loss. You'll see that the money in, money out lines are grouped under the headings of operating, investing, and financing. Followed by that is the reconciliation of the opening balance of cash plus any net change in cash movements for the year, and then this cross-checks against the closing cash balance at the end of the year. Without sustainable cash flows from operations, then any cash flows generated by investing or financing won't be of any real benefit, unless the point is to have cash flows from investing being the primary source of income for the business. These two are two of the three major financial statements. Here, the profit looks great. It's $146,300. However, cash flow wise, this client actually went backwards by 15 grand for the year. And this is exactly what we mean when we say profit doesn't equal cash. Just so you know, to pull this whole story together of what happened in this business, you'll actually need the balance sheet, which is the last of the big three financials, but that's an explanation we'll save for another video. Now, cash itself is an idle asset, but it is essential. You need to understand the cash flow cycle so that you can manage any surplus balance and make decisions with confidence. Some of these decisions might include, do you invest the surplus cash? Do you use surplus to pay off any debt? If you do get rid of the debt, do you then keep the debt facility open even though it might be paid off just in case you need it in the future? Should you sell your accounts receivable for a short-term cash injection? And would the financing costs associated with that be worth it for the future? Do you take out additional funds to the directors or the owners? Or do you just hold the excess in a working capital buffer account? These are all questions that you can answer with confidence when you know and understand the cash flow cycle in your business. Big secret number 2 is to monitor your numbers. You must know your numbers. Cash flow is the fuel that will run your business, and without it, it's not going anywhere. Any system that you introduce has to be simple enough so that you can manage and understand the reports, and you don't have to rely on third parties like external accountants or bookkeepers. This isn't to say that you wouldn't invest money in great advice to get the process set up, just that running the process needs to be simple and straightforward, otherwise it won't happen. You need to know which measures will be useful for your business in order to truly know your numbers. Here's a few where you can start. Track your actual cash balance. Look at your average debtor days. Look at the number of invoices that are past due. Calculate your current ratio, which is cash and cash equivalents divided by the current liabilities. Look at your average days inventory held, and look at your average days payable. To really monitor your numbers, you do need to actually look at your financials. So these are your profit and loss, balance sheets, and cash flow statements. Over time, you'll also want to build a number of metrics that both tell you in advance and from behind, so we call them leading and lagging indicators, that give you a good overall view of your business and what will likely happen in the coming days, weeks, and months. There's literally hundreds of different KPIs that will look at different things in your business. The key here is to get down to the really few top-line metrics that can help you understand more about your business, and then look for a number of deep dive metrics that will help make the data-driven decisions all that more effective for you. Now, you might think that this is a really boring topic, but don't let that keep you from understanding just how important it is to your business. Managing your finances is probably one of the most critical functions in your business, because let's be honest, if there's no money, there's no business. Good business practices add value to your business. There's so many benefits that come from following good practices that you'd be crazy not to do it, especially when putting in place these systems can be so easy, and it leads to you being able to produce accurate and timely reports so you can really start to see just how your business is performing. We have a course called Know Your Numbers, and this is where we show you how to start getting to the story behind the numbers in your business. Here you'll learn about the 4 types of metrics that you need to look at and how you can tame your business, not by working more, but by using systems. We'll even give you those systems so you aren't having to create something from scratch. You'll also learn how to read and really understand the financial story in your business. Big secret number 3 is to have proactive control. Beginning to take control of your cash can be overwhelming, particularly if you have other things on your mind. You can start out very simply and just start by checking on a few things regularly. The main thing here, the big old number one, is to check your bank account balance every single day. You want to know who's paid you, who have you paid, and who's due to pay you in the next 7 days. You can make this easy by having your software linked to your bank account so that your transactions just feed in. This way you're allocating your transactions regularly as well, which will make it easier to track your debtors, so the people who owe you, and any of the payments that you're making. And this way you only need to go to your software to see this rather than having to log into different bank accounts. Another way you can take proactive control of a key driver in your business cash flow is to every single week check your trade debtors or your accounts receivables list. What does this mean to check your debtors? Let's just go through a few things that you'd be looking for when you do this. First, you've got to run an accounts receivable or a trade debtors report. What you're looking for is how many invoices are past due. Who on that list is outside of your trading terms? Is there anything that can be done there to encourage payment? And then make a decision about what you're going to do with those customers that are outside of your trading terms. Will you put them on a debtors review program? Will you review their credit terms, such as you won't offer them any further credit until they're back within the terms? Will you just put them on a cash-only system? Or will you refer them to outside debt recovery? Each month when you run your financial housekeeping reports, you can then take notes, compare prior months, and look at the timing and trends on these key numbers. In our cash flow series, video 7, we take a look at accounts receivable, and tip number 8 looks at cash collections. If this is a topic you want to look at in more detail, then it would be worth it to have a look at both of these videos for some specific tactics you might be able to use. Poor cash flow can destroy a business and the morale of the team. Taking back control of your cash has so many benefits, and it can be done quite easily with quality planning and bringing in the help that you need. Just in case there was any doubt over the importance of managing your cash, here's 7 reasons why you should take control of your cash flow back today. The first on the list is lower financing costs and bank charges. When you maximize your cash flow and optimize the inventory or workflow pipelines, you can reduce the reliance for outside funding, which in turn leads to lower overall funding and interest costs. The second is access to opportunities. Lack of cash can lead you to having to pass up on some otherwise great opportunities to grow your business. For example, you might have to give up access to discounts or being able to purchase new equipment, make that new investment, or being able to invest in yourself. There are ways to approach alternative investments that don't take too much cash, and we can help with that too. The third is improved relationships with your customers. When your customers know the rules of doing business with you, then you shouldn't have to be in a position where you're having to chase them for money. A formalized accounts receivable policy that's actually enforced gives your clients confidence that you will follow up on what you say. The fourth is improved relationships with suppliers. Being able to pay your bills when they're due can lead to a great working relationship with your suppliers, and you might even be able to leverage that ability to pay on time for discounts or faster turnaround times on your orders. The fifth on the list is staff morale. Being in small business can be stressful enough without having the added issue of cash flow concerns. Given how closely everyone works together, this stress shows, and it can impact on the culture that you're building within your business. The sixth is solvency. Now, solvency is the ability to pay your debts as and when they fall due. Without good cash flow, your business is in jeopardy. Under Australian law, if you operate as a company, there are a number of directors' obligations that tie directly to solvency. And the seventh is your ability to grow. Good cash flow is essential to having enough resources to fund and build growth in your business. Here's a special bonus secret. Secret number 4. This one is to build a great team. The worst number in business is 1, so please don't leave yourself open to this mistake. In this case, having just one of you is the worst. You cannot grow a business in a sustainable way if you're the person doing everything, answering the phones, doing the quotes, chasing invoices, and then doing the actual job. Also, this goes for more than your team members. Having all of your income eggs in one basket by having one key account, or only one product or service, using only one traffic channel, or relying on only one major calendar event for the majority of your leads and sales. One is just the worst, so please don't do it. You might not realize this, but one of the easiest people you'll ever hire is a great bookkeeper. It's my belief that unless this is your skill set and area of expertise, one of the best things that you can do for your business is to hire someone else to help you. Business and investing are team sports, so the question then becomes, who's on your team? Your bookkeeper is your business best friend. We've got a checklist called the Ultimate Bookkeeper's Task List, and we give that away. It's free, and if you don't have it already, you should definitely go and get it. This task list should be used to help build out a position agreement for someone that might be looking to hire or someone who's already in the role. The tasks that you want the bookkeeper to do should be added to their position agreement or job description, and this gives a way for you to measure performance. For example, one of the key criteria might be all debtors statements have to be sent out by the 3rd of the month. Now this is a bright line test. It was either done or it wasn't. So it allows for you to then measure performance. It also gives your employee or assistant clear guidelines for what it is that you expect them to do and when. If you work with someone outside, then this can be used to create a scope of engagement document. Now this is an agreement that covers the things that they'll do and what you need to do. It makes it clear who has responsibility and accountability for each line item. Your bookkeeper will likely end up a key part of your team. As a business owner, you're probably used to always being the first point of contact, but if you're getting bogged down in the basics and you're the one doing everything, then you won't be able to grow your business in a sustainable way. Worse still, if you stop working, then everything else stops too. If you don't have a bookkeeper, just take the time and have a look through the task list and then ask yourself these 2 questions. Are you the best person to be doing those tasks? And in doing those tasks, is that the highest and best use of your time? Hiring a great bookkeeper is something that frees you up from the minor work and allows you to really focus on your core business. It also means that there can be a rhythm to the work that gets done. If you still aren't sure about whether you need a bookkeeper or not, please just search out our video called the 5 signs you might need a bookkeeper. If you've heard of us, you'll know that our mission is to create a world where people successfully start, build, manage and grow their small businesses in a way that leads to a meaningful and prosperous life for themselves and families, their team members and the wider community. To deliver on this, we want to help you to double your net profit and cut your time working in the business, all in 12 months or less. This is all very possible, and we've got a number of ways to help you get there. We want to be part of your team too. So how can we help you do that? Here's 2 ways that you can get to know us better in what we do and how we can help you. If you're looking to start systemizing your bookkeeping, then start with the Ultimate Bookkeeping Task List, which you can get for free. There's a link on the page below. Second thing, please just reach out and say hi. Join our Facebook group, 60/40 Entrepreneur Grow Your Business. The link for this is below too. If you're looking for a way to take your small business cash flow to the next level, then we've got 3 ways that we can help you do that. We start with Know Your Numbers. This is where you really see the difference between making a profit and actual cash flow. You already know how critical cash is to your business, so this is a knowledge-based course that introduces you to measuring what matters and learning how to read your financial statements. The second is Financial Housekeeping. Although this can be done as a standalone, it helps if you do it after the Know Your Numbers course, because then you know the reasons behind why you want to follow a reporting structure that has a rhythm. Financial Housekeeping is a very practical, hands-on, how-to course where we show you step by step the actual things that you need to measure, watch and report on for a daily, weekly, monthly, quarterly and annual basis. The last in this is On-Track Cash Flow. This is where we take the practical and the applied knowledge from the 2 previous courses and combine them into one where you actually get to build your cash plan and a cash budget. This means that you'll be able to make real-time decisions about where to spend your money, and you'll develop a plan that enables you to proactively manage your cash. If you prefer to scan, here's 2 QR codes. The first is for a link to the workbook, and the second is for you to get access to the Ultimate Bookkeeping Task List. So thanks for watching. Hit the like button and subscribe to our channel for more content that covers a variety of topics, so pretty much everything small business. If you'd like to know a little bit more about what we do, stay and watch the next video, or you can check out our entire cash flow series, which is 14 videos all about small business cash flow. Have an amazing rest of the day.